Well, good evening, everybody, and welcome back to the best finance channel on the internet, Strongman Personal Finance. In this amazing high IQ, professionally delivered video, we're going to cover the most recent earnings of Adobe Nairobi. This stock has been doing okay. Okay, it's not vertical lining like the rest of the market, at least from what I've seen. But it's doing okay, at least from a fundamental basis. And we're going to go look at the fundamentals because on this channel, we don't just listen to pumpers and hype boys. We actually look at the earnings because I'm a CPA and I know how to look at earnings. So let's dive right into Adobe Nairobi. So we just had earnings and the stock is down 0.34% and 0.21% in the aftermarket. So the year-to-date return of Adobe is negative 21%. So it's the rest of the market's kind of going up. You know, Adobe's kind of lagging a little bit, down 21%. Over the past year, Adobe's down 39%. And over the past 5 years, oh my Lord, it's down to, I didn't know it was doing this bad. So Adobe has been kind of a laggard, okay? Now, my personal opinion of Adobe is it's got a decent amount of monopolies. Okay, like what else do we use besides PDFs? I have an honest question. What do we use besides PDFs? I don't know. Adobe at least has a lockdown on that. I don't know how much of their revenue that is. I guess we'll find out. But I think it has a decently solid moat. I'm not sure. I guess we'll see in the earnings maybe what the issue is. It could have something to do with AI disrupting them. When somebody says AI is going to disrupt something, I'm instantly critical. Okay, I don't automatically jump to the conclusion that AI is going to disrupt something. I hear every day that, oh, AI is going to disrupt accounting, bro. Unless a computer, an AI, has human level intelligence, I don't see how AI is going to take over tax accounting, for example. Okay, because you actually have to know what you're looking for, and you have to know the right questions to ask people. And you actually have to know how to properly categorize transactions and provide tax planning, okay? There's lots of stuff that goes into it. The same thing can apply to Adobe, okay? That's probably what's going on here. So the stock is sold off, and you can see the PE is pretty low. I mean, forward PE of 15 and trailing PE of 21. This is a stock that's not priced as a growth stock. It's not. It's basically priced as like a standard corporation. I believe this is actually, the PE is lower than the S&P 500. Okay. Let's go look at the earnings, and then we'll go look at an overview of their past earnings growth, revenue growth, et cetera, et cetera. So here's their Q3 fiscal year 2025 earnings release. Okay. So they say Adobe is the leader of AI creative applications category, with AI influence AAR surpassing 5 billion and AI first ARR already exceeding our 250 million target. AI product innovation and strong go-to market execution. We're pleased to once again raise our 2025 total revenue and EPS targets. Okay, they're raising. Adobe achieved record revenue of just under $6 billion in its third quarter of fiscal year 2025, which represents 11% year-over-year growth. That's very solid growth. That's very solid growth. Okay? Compare that to like Tesla, which has negative revenue. That company has a forward PE of 20 trillion with, I would hazard a guess, much lower margins. Okay? Interesting stuff there. 11% year-over-year growth is pretty incredible. Pretty good. I mean, not incredible, but pretty good. Let's look at their quarterly revenue growth rates over time. They're like consistently posting 10% year-over-year revenue growth. That's not that bad. Okay, let's look at their margins over time. Gross margin has stayed around it's almost 90%. Operating margin, 36%. This is an insanely profitable business. Profit margin, just under 30%. Free cash flow margin, printing free cash flow. What's the EPS growth over time? Growing EPS pretty steadily. Okay. What's the free cash flow per share? Is that growing? Yeah, it's actually gone up recently. They seem to be doing pretty good. What's the issue? Somebody must be really concerned about this company's future. The market must be really concerned about this company's future. Because when I look at the revenue, the profit growth, I see decent. Everything seems pretty decent. It seems like something is really holding this stock down. Interesting. All right. GAAP operating income was $2.17 billion. GAAP net income was $1.77 billion. Highly profitable business. Cash flows from operations was $2.2 billion. Let's go look at their cash flows from operations over the past couple of quarters. Look at that. Trailing 12 months operating cash flow, printing operating cash flow. Let's look at it from a quarterly basis. This is their cash flow from their core operations. It's been trending up over time. Steady, strong cash flows. Highly profitable business. I might buy the dip, bro. Exiting the quarter, remaining performance obligations were $20.44 billion, and current remaining performance obligations were 67%. Adobe repurchased 8 million shares, so the stock's selling off. They're buying back shares. Revenue's growing decently. Earnings are very solid. What's the issue? Hey, I'm a hot guy. All right, digital media segment revenue was $4.46 billion, which represents 12% year-over-year growth. Okay. Digital experience segment was $1.48 billion, representing 9% year-over-year growth. Pretty solid. Digital experience subscription revenue increased 11% year-over-year. Business professionals and consumers group subscription revenue was $1.65 billion, which represents 15% year-over-year. I'm seeing solid revenue growth everywhere. Okay. The following table summarizes Adobe's fourth quarter fiscal year 2025 targets, which assumes current macroeconomic conditions. Oh, duh. All right, they're guiding for next quarter of total revenue between $6.75 billion to $6.125 billion. So if we compare that to last year, okay, so Q4 of 2024, they had $5.6 billion. So on the low end, they're guiding for, let's see, $5.6 billion, 8% revenue growth. I mean, that's decent on the low end. And on the high end, they're probably guiding for about 10% revenue growth. Earnings per share, they're guiding for between 4.27 to 4.3. What was it the prior year? Let's see, Q4 2023, EPS of 3.8. All right, so they're really growing earnings per share. That's a strong growth in earnings per share. That's buybacks and profit increases. The following updated table summarizes Adobe's fiscal year 2025 targets. So total revenue, they're guiding between $23.65 billion to $23.7 billion. Last fiscal year, 2024, their revenue was $21 billion. So they're going from $21 billion to $23 billion on the low end, $23.5 billion on the low end. Solid. Okay. Earnings per share between 16.53 to 16.58. Earnings per share, fiscal year 2024, 12.36. So earnings are guiding to grow 12.36. Let's see. 16.53 divided by 12 point. What was it? We'll say 12.36. 12.36. Almost 33% growth in earnings per share. Oh my God, they're cooked, bro. They're cooked. All right, let's look at their income statement. So, solid growth in subscription revenue, actual decline in product revenue, but very immaterial. And then decline in services and other revenue year over year, but that's immaterial. The margins on their subscriptions are insane. Obviously. It's like over a 90% margin on their subscriptions. Pretty good. Very high margins on their product revenue. Services revenue, they're actually barely profitable on that. Services and other, they're barely profitable on that. But the subscription revenue is solid and it's growing. Okay. Gross profit is up 10% year over year. Pretty solid. R&D expenses about $1 billion, but no real change from last year. Sales and marketing, they spent about $200 million more. A little bit more spending on general and admin. What's the issue? What's the concern? Somebody tell me what the concern is. They got almost $5 billion of cash and almost $1 billion of short-term investments, $2 billion of receivables, total current assets of $9.4 billion, and total current liabilities of $9.2 billion, of which $6.3 billion is deferred revenue. So that's cash they've already received, but they haven't earned yet. So their real short-term debts, unless everybody cancels their subscriptions, is roughly $3 billion. So very solid. They're very strong in liquidity. Their assets, the vast majority of their assets are goodwill. That's acquisitions. So they have a lot of intangible assets. I guess they had some big acquisitions in the past. And then their debt, they packed on about $2.1 billion of debt in the last 3 quarters, it looks like. So, okay. Why did they pack on that debt? What did they do? What did they do? They didn't buy property, plant, equipment. I don't see changes in goodwill. What was that debt for? I guess we'll find out in the notes, maybe. So they did pack on debt. I hope they didn't take debt just to buy back shares. And they bought back a very solid amount of shares. Okay. Let's see. In the last 3 months, they spent $2 billion on buybacks. So they seem to be doing pretty good. I guess there's some kind of concern about AI screwing them over. That could be the only possible reason I can imagine. So overall, I mean, pretty solid earnings, pretty solid guide, pretty solid profit growth. I think they have a monopoly in some places. Honestly, I'm not reacting negatively to these earnings. All right, let's do some comments and then we're shutting this down. The schedule is worse than a clown house. Oh, I'm sorry. Sign up, become a pay. That's right. You better sign up, become a pay pig. $4.99 a month. I answer all your comments. And you get discounts on sponsored videos. Adobe by Floby, bro. I'm actually surprised. The stock growth has been very underwhelming. Adobe is a little foo-foo stock. Is it? Is he buying the dip, bro? I use Adobe and Figma. I mean, I have an Adobe subscription. I mean, I might cancel it maybe, but it's pretty useful, okay? Especially when you're in tax, because I need Adobe PDFs to obviously print tax returns, and then I do signatures and all that. So Adobe is useful. Adobe is useful in some aspects. So anyway, interesting earnings. Thank you, everybody. Like, subscribe, consider joining as a member. Consider me doing your business and or personal taxes any state in the United States. You can talk to me for free. I give you upfront quotes, and I can prepare your taxes like a boss. You guys have a wonderful, delicious, superstitious weekend. Cheers!